Hello, hello, hello. Hello, ladies and gentlemen, boys and girls. Welcome to the best part of your Thursday. That's right, it's another Bookkeeping with Brian. I am Brian Humphrey, partner here at Humphrey Bookkeeping LLC. Starting today and then moving forward, I'm changing the format of these videos. I'll be giving some extra explanations of the content and details about my firm at the end of the video. I think we're just going to jump right into the meat and potatoes every week from now on. I got some shorter videos so I can get everybody some quality information and get you back to your day. Okay, so we're just going to jump right in here. So after last week's session, I had some questions about the metrics and KPIs that we talked about during the case study that we were doing for Bob's Plumbing. So for the next couple of weeks, we're going to dig deeper into each of those metrics in more detail. So let's get to it. So today we're looking at what's called the job completion timing impact, okay? So this pertains to when any type of contractor begins a job in 1 month and then completes it in another month. And I'm going to explain how all of this works in the next 5 or 6 minutes or so, okay? So here's the setup. So let's say today you start a big job that you expect will be completed, we'll say, in the last week of May, okay? So in that situation, you want to use what's called the work in progress or WIP accounting method. So what this method does is it lets you apply both your costs and your revenue from a long job, or really any job that runs in multiple months. It lets you apply those accurately. Now this is important for several reasons. We'll get into it in a little bit. But basically the concept is that when you start that big job, every estimated expense, supplies, materials, labor hours, all of that goes into this WIP account on your balance sheet, okay? So this is like a holding tank that holds your estimated costs and revenue until they are recognized. So until the work is done, or at least partially done. So we have, what do we have, about 1 week, almost a week left in April. So let's say after working through April 30th, 20% of that job is done, okay? So you're going to move 20% of the cost out of that holding tank and into your expense report, and then 20% of the contract value from the holding tank into your revenue. That way your margins for April are correct, okay? So this first slide here, this shows what happens kind of without using the WIP method. So if you look at your April report, it doesn't look good. Negative $14,000 on this job. That's because you have all of the expenses like material costs, everything that you purchased, and then 1 week's worth of labor on that job, but you only have 20% of the revenue from the deposit that you took before you started, okay? And then when you look at the May report, it looks amazing because you have all this revenue and hardly any expenses because your expenses fell in April, your revenue fell in May. The problem is neither one of these pictures is accurate, and that is the job completion timing impact. That's basically what that means, okay? So this next slide here is kind of a simple diagram of how we fix that problem by using the WIP method, okay? So if you see here on the left-hand side, the job starts, you get your all of your estimated costs and revenue, you put those into the middle, into the holding tank. Now, as the job progresses, you release both cost and revenue together, keeping your monthly margins accurate. You can do this a few different ways. Some people like to do it on a time schedule, every week or 2 weeks. Some people like to do it on a job completion schedule, by percentage. Really, it doesn't matter which way. It's your business, it's personal preference, it's however you like to do it. There's several ways that you can go about it, all right? Now this slide here, I know it looks kind of technical, and that's because it is. These are examples of actual journal entries that are going to happen in your general ledger during each phase of this process. So up at the top, you get your deposit, your initial deposit, that's how you put it in. Then you get your estimated material and labor costs, you enter those into the green holding tank. The important thing to notice on this one is step 3. So this shows tracking by percentage in increments of 25. So each time you recognize more of the revenue and costs together, you got to do those together, okay? So that's the journal entries of how you would do that, and this step 3 will repeat every 25% of completion until the job is completely done. Now I know it's kind of a confusing slide if you're not used to journal entries on a general ledger, but that's what we're here for. You don't have to worry about it. My firm does these things for you so you can focus on the jobs and on the contracts, okay? Now, one thing to remember on this is whether you're tracking by date or by completion percentage, you do always want to do allocations at the end of the month for all of your WIP projects, all right? So if you have like 4 different projects using the WIP method, you want to figure the completed percentage on April 30th for all of them, and make sure that you're allocating both cost and revenue before you reconcile the month of April, because that ensures that your numbers come out properly. It's very important. Now, I know some people are probably already thinking, Brian, why would this even matter? My guys and I, we do the jobs, we get paid. Who cares about the timing as long as the money makes it to the bank, right? Well, I mean, I can probably give you a dozen or so reasons off the top of my head, but what I have for you today are 4 of the more common ones that seem to hit most businesses at one time or another. Okay, so first up is cash flow problems. So let's say a job is 50% completed, but your costs are at 75% of what you estimated. So WIP tracking can let you know that you might be going over budget before you actually do. So these numbers, it might be just because maybe you've bought some finishing materials for the late stages of the project. Maybe you've already purchased those, so that would be no big deal. But it could be because there were snags or hiccups at the start of the job, and you're going to end up going way over on your labor hours. So this lets you make adjustments, or at least get out in front of possible issues as soon as possible. We all go over budget on a job from time to time, and the sooner you know that you're going over, the more options you have when you take action on the problem, okay? Second up is loans or credit. So maybe you need to get a loan for some high-end equipment or a couple of vehicles. Maybe you want to expand and open another location across town. Now, if a loan officer sees inconsistency in your reports, you may get a worse offer on the same loan, or you could even be denied the loan altogether. So you definitely want to make sure that your numbers are consistent across the board. Next one here is difficulty valuing your business. So messy financials lower its value if you decide to sell your business. We actually have a client right now, he's a tradesman, that a big part of his retirement plan is the money from selling his business. Now, we weren't doing his books or accounting, but he did hire us to get some reports together and cleaned up a little bit for a potential buyer. Well, that potential buyer came back with a valuation on his company that was way lower than expected, and he wasn't able to accept the offer that they made because it was so low. Now, I'm not going to say that this is 100% why, but this not using the WIP method could definitely have played a big part in that low valuation, because when the revenue looks sporadic, the valuation of the company does suffer. And then the last one here is one that affects almost every contracting business, and that's client relationships. So clear tracking of project completion goes a very, very long way in avoiding disputes about timelines and billing and payments. If you have regular reports with solid, consistent numbers, and you can show somebody in black and white, hey, this is the progress we're making, this is where we are, you can sometimes settle disputes before they even start. We've all had difficult clients that want to nitpick about everything and how long it's taking, and you said you were going to be at this point by this time. Just having these reports already in place to be able to show your customers, it can just really put them at ease and kind of just get rid of a lot of potential issues before they happen. So that's basically the WIP method in a nutshell. Now remember, this is bookkeeping work, but this is not what I would call bookkeeping basics by any means. There are plenty of solid, competent bookkeepers out there that have never even heard of the WIP method, and that's okay. But that is, just one more reason why it's important to be selective when you decide to partner with a third party when it comes to your financials. You want to make sure that they know what they're doing. Here at Humphrey Bookkeeping, we're a family-owned, full-service bookkeeping, tax, and advisory firm with our fearless leader, EnrolledAgent, my mother, Jackie Humphrey, as our managing partner. For those of you that don't know what an enrolled agent is, that is the highest credential that you can get from IRS if you do not work for IRS. So it's basically the biggest title that they will bestow on a civilian, so to speak. So we know this stuff, and as we do the work for you, we save you time and money, but we also help you understand it so you can make better data-driven decisions to improve your business and improve the quality of life for yourself and your employees, okay? So if you're ready to take the next step in your business, schedule a meeting with us on our website, humphreybookkeeping.com. We do free consultations on the phone or on Zoom, however you like to do it. Share your business goals with us. Let us know where you're trying to get to, and we'll let you know what we can do to help you get there, okay? So of course, as always, make sure you like and share this video. You might know somebody out there that maybe this information will help them out a lot. You never know until you try. Follow us on YouTube and or on Facebook and Instagram. Subscribe on YouTube so you get notifications about new content. I've got links to all of the social media and our contact info on the screen and in the description below this video. All right, that's it for today. Thanks again, everybody, for joining me. Have a great rest of your week, and I'll see everybody next Thursday.